chips are done. AMD, Don.
Yeah, chips are done. Specifically, AMD is actually leading the pack to the downside here. I mean, you don't have to look much further than Intel as well. You look at Intel, it's still getting pummeled. Intel has even announced where they're actually coming out with competition to NVIDIA, and it's done nothing for price action of the stock. So look, I think we're finding out right now that the price action that we've seen over the last 5 months in many of the chip stocks, in NVIDIA and so forth, and GPU, has been much more about a trade than it has been about fundamentals. And that's, again, you're seeing it kind of relinquished in the chart here in real time. So with AMD, the thought that it's done, look, it's right up to about this 160 level. I think the 160 level here in NVIDIA, or AMD, is absolutely essential. And that the break in AMD could actually take some of the other chip stocks along with it. Obviously, some earnings due out. So yeah, I'm absolutely a bear. We've seen a big reversal inside of AMD recently. In this case, though, I am going to go all the way out to the June 21st expiration. Not crazy, but I am looking for a substantiated move to the downside. I'm going to be buying the 150 puts, selling the 140 puts. It's a full $10 wide put spread. It's done for a $3.35 debit. This is one that, yeah, no question, with that earnings coming up, this is make or break at that 160 handle. But chips at this point, again, it's more about the chart and less about the fundamentals.
AMD is a well-known name between investors in the semiconductor industry and is often compared to giants like NVIDIA. Recently, the company has been grabbing the attention of a whole new crowd. Big names on Wall Street, including investment firms like Morgan Stanley, are starting to get bullish on AMD stock, which means they think now is a good time to buy in. In this video, we're going to talk about why Wall Street is turning bullish on AMD. Not only that, we'll also talk about AMD's newest bull, HSBC Bank, which believes that the company has a strong shot against NVIDIA. But before we do that, if you want to keep up with AMD's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
You know, have these charts run up too much? That's the question. Ben, your thoughts on the technicals?
Yeah, Nicole, I'm not sure if the chips, plural, are all done, but I would argue that AMD is definitely coming under pressure here, and it does look like across multiple time frames we are seeing quite the reversal relative to some of that upside momentum that we had been seeing. Let's just begin first and foremost on the hourly candle chart, and I think there's a couple ways of looking at this. I want to direct your attention first and foremost to the V-top type pattern on the top left corner of the screen there, because you don't see that all the time, right? We rallied up to 227 and rejected that level pretty swiftly along the way back down here to recently below 159. You can see areas of consolidation that are formed at lower and lower levels. So we can easily identify that we're trending lower, right? Because value's forming lower. 180, 167. I got a little bit granular here a minute ago just breaking this down, because you can see we did recently come out of that area around 167. We're balancing around 166. So you can easily identify this, though, as just one larger area, and then you're looking at 180. But no matter how you slice it, a couple different ways of looking at it, a very bearish pattern right now where you have easily identifiable levels that, should we take them out on the way up, well, then you can establish that working assumption that we're trending lower, establishing value lower, is no longer a valid one. It's pretty basic, right? Less is more kind of approach towards trading. Let's take a step back. I want to show you another chart, and bringing in that V top that I just mentioned, 227, the move lower we've seen. This is why I say that maybe not all chips have given way here, but it does look like AMD has. Look at this, the recent breach of 170, definitely not what the bulls wanted to see, right? Why? Because, well, we were forming value higher and higher on this, again, daily, or I'm sorry, 4-hour candle chart. So we've gone from a more intermediate to a bit of a longer term chart here. We went from looking at this sell-off to where it puts us on the bigger picture, and you can see that it has reversed a bit of a trend. Areas that were being established to the upside are no longer holding, right? So it's tough to still kind of argue that we're trending higher when you're taking out 170 and struggling to get back above it for that matter. Let me show you where we are relative to the 50, the 200-day moving average. You've also taken out the 50. So while I can't agree with Don on the first two, yeah, I'm going to get in on this one, right, in terms of looking for some further bearishness, looking for the weakness to continue. A swift rejection of 227, and you can see some of the selling that's ensued.
Yeah, I'll give you the final say here, John, because shareholders, obviously people got so excited about Lisa Su and AMD, and they saw the run that they'd seen for NVIDIA, and there was a lot of FOMO that was happening, and the people who jumped on board of late have been woefully disappointed. Final thoughts on AMD?
Sure. Yeah. First of all, it makes me a little uncomfortable that Ben is on the same side of the trade as me. But look, the sell side activity in here kind of speaks for itself. And, one thing to be mindful of really in many of the major tech stocks right now as we start to enter a more volatile period, we are literally 2 or 3 days removed from all-time highs in things like Microsoft, Meta, and you've got to be careful how you proceed forward. Again, I reiterate, tech has really yet to even enter into any real sell side activity, hence actually jumping on this AMD position, trying to get ahead of what could be an onslaught of sell side.
The past year has been an incredible one for AMD investors as shares of the chipmaker have shot up an impressive 130%, outperforming the PHLX Semiconductor Sector Index's gains of 57% by a huge margin. Now, AMD stock is up by approximately 18% year-to-date, and investors have been buying the stock hand over fist in anticipation of a rapid acceleration in the company's growth thanks to the high demand of AI chips. The newest bank to jump on the AMD bandwagon is HSBC, whose extremely bullish price target on the stock was seen as a great endorsement and a positive catalyst for the stock. This past month, AMD stock has been down 14%, and many attributed this to various reasons, like the Fed delaying the interest rate cuts and the US-China ongoing chip war that prevented AMD from introducing new products to China. So, as you'd expect, HSBC's bullish price target upgrade couldn't have come at a better time, sending the stock 2% higher. Is this the beginning of a turnaround for the chipmaker? Let's find out. Hello everyone, and welcome back to Investocracy.
The market is vulnerable to an even larger pullback. To break this down for us, we've got Kevin Gordon, Charles Schwab, Senior Investment Strategist, here with us. Kevin, just walk us through the thesis here on a larger pullback and what you're expecting here.
Well, I think it's really because, we've gone through now a pretty extended period of time with sentiment running really hot. This really started back in sort of mid-November when you had, major indexes and most stocks actually in each index really rebounding strongly off of that October 27th low. And then you shot quickly into extreme optimism territory across an array of sentiment indicators we track both on the attitudinal and the behavioral side. So whenever you get in that territory, you are vulnerable, but you can kind of need a negative catalyst to push you in that direction. We would argue probably at this point it's related to yields, but it's also related to what's going on in terms of, maybe a repricing of Fed policy. So, when you think about oversold statistics like the number of stocks that are above a certain moving day average, whether it's the 50-day, whether it's the 200-day, you can kind of go down the list and see that we haven't yet probably gotten to that full rinsing phase. So maybe we push a little bit lower to wring out all of that sentiment. But I still think, the upside is that you're in an uptrend still. So you're in a stronger position when you were sort of entering this correction, if you want to call it that right now. It's still a little shallow, but you were in a stronger position entering into that than you were in prior instances last year.
So then should this still be viewed maybe as a buying opportunity? We talk about the fact that we're seeing a bit of a pressure here across the broader markets, at least over the last couple of days. It still maybe is a strong entry point then for investors?
Yeah, I think it depends where.
Yeah.
I mean, when we came into 24, even with the strength that you had seen across, an array of sectors in October, November, and then December to finish out the year, you had a lot of catching up to do for a considerable chunk of the market. I mean, when we came into 24, about half of the S&P 500 was still trading lower than where it was in January of 2022. So, and a lot of that was concentrated in deeper cyclicals like energy and financials and industrials and even materials. So I think that there's still a lot of catching up to do there, especially if the cyclical parts of the economy, notwithstanding some of the weakness in this morning's housing data, if you continue to see the roll through of the recovery that we've seen in areas like manufacturing and the goods part of the economy, then yeah, I think there's probably more sustainability to that trend. But not without some choppiness as we've been figuring out over the past week.
HSBC analyst Frank Lee upgraded AMD shares to buy from hold, boosting his price target to $225 from $180, implying about 40% upside from where the stock is trading now. Some analysts are saying that NVIDIA's Blackwell announcement during its GTC 2024 event definitely contributed to AMD's current dip, as it meant more competition for AMD to deal with. But Lee believes that AMD can take NVIDIA on. He wrote that it's unlikely for NVIDIA to have 100% of the AI GPUs market, and his base case assumes that AMD will have 10% of the market in 2025. That would potentially translate into $12.3 billion in AI GPU revenue for AMD, according to Lee, while the consensus view is around $9 billion. In a bullish case scenario, however, AMD could capture 15% of the market in 2025, which would imply revenue potential of $18.5 billion. He also wrote that AMD shouldn't be too worried about NVIDIA's upcoming Blackwell chips, noting that AMD's MI300 series is more of a competitor to older NVIDIA hardware. In other words, Lee thinks that NVIDIA's new chips will likely serve a different purpose than AMD's, so they won't be direct competition to AMD. Additionally, he said that direct competition between the two companies will only exist once AMD introduces new, upgraded chips to its MI300 line. It's not just HSBC that's betting big on AMD now. In fact, a lot of investment firms and banks have recently aired their opinions about the company. For instance, Wall Street has been upbeat about AMD's prospects, and then the stock received 3 upgrades earlier this month from Barclays, Susquehanna Financial Group, and KeyBank Capital Markets. Barclays upped its price target on AMD from the earlier estimate of $120 to $200, while Susquehanna and KeyBank increased their price targets from $170 and $195 to $200 and $270, respectively. It must be said that Wall Street analysts aren't always right, but these price targets suggest that AMD stock is set for healthy gains, even though an analyst at Northland Capital Markets thinks otherwise. The investment banking firm recently downgraded AMD stock from outperform to market perform, pointing out that the company's AI business may not grow as fast as investors are expecting. So, will that be the case, or are the bulls the ones in the right? To answer these questions, we have to walk you through some interesting things going on with AMD's business that are catching investors' eyes. But before we continue, if you like this type of content, make sure to hit that like button, subscribe to our channel, and turn on notifications to stay up to date on everything happening with AMD. That said, back to the video.
There, Jenny. Yeah, seeing an impressive gain today. There's news that that AMD unveiled a new series of processors for AI-enabled business PCs and desktops. So as you said, coming for NVIDIA. So that could be driving shares higher. But then there's also some positive analyst action that's likely giving this boost to shares. So shares are up about 1.5% right now, but it's been a pretty rough month for AMD. Shares down almost 10% in April so far. And one analyst over at HSBC says now is the time to buy the dip. He upgraded shares to buy from hold with a price target of $225, up from his previous target of $180. As you can see here, AMD currently trading around $162.39. So that represents about 40% upside from where it's currently trading. HSBC sees an attractive risk reward at current share levels, says market expectations for the company's MI300 2024 and 2025 revenue have been reset. So the street is looking for, or AMD's own guidance is $3.5 billion in sales for the MI300. HSBC's view is that the company could boost its forecast to above $5 billion. Also says AMD's next generation AI GPU is a more direct competitor to NVIDIA's GB200 in 2025. Thinks AMD has enough supply capacity and demand to surpass management's AI revenue guidance. He actually says that HSBC's base case is that AMD can take 10% of the market for AI GPUs in 2025. He says that would imply AMD's AI revenue for the next year can reach $12.3 billion. That's quite a bit higher than consensus, around $9 billion. But then his bull case is that AMD captures at least 15% of the market, and that could mean $18.5 billion of revenue from AI GPUs. So definitely bullish around the AI play there. Also lifted his earnings estimates for the full year of 2024 and 2025. Seems to be giving shares a boost. As you said, off session highs was up as much as a little bit over 2% just a few minutes ago. Now it's only up about 1.2%, but in the green nonetheless, and chipping away at some of those monthly losses. But yes, far cry from NVIDIA. Shares only up about 10% year to date. Taking a look at NVIDIA, 75% year to date gains. So far cry from that.
Aside from AMD's dominant position in the PC market thanks to its impressive rise in processors, Wall Street is also bullish on the company's AI potential. Yesterday, AMD unveiled the new Ryzen Pro 8040 series, which was built for business laptops and mobile workstations. These new chips are expected to be available in platforms from HP and Lenovo in Q2 of this year and will help AMD expand its share in the AI PC market. And of course, there's a lot of opportunity there for AMD. According to market research firm Canalys, 19% of PCs shipped in 2024 will be AI capable, and this percentage will grow to 60% by 2027. Now, it's not all sunshine and rainbows for AMD. Competition is fierce, especially from NVIDIA's H100s, but AMD is known for offering more competitive prices for its products compared to NVIDIA, and this could be a major factor for businesses looking to invest in AI hardware without breaking the bank.
Looks like Jerome Powell's speaking and S&Ps are on session lows. So, hey, all of this is fluid as always. Caroline, I was going to make a joke and said, I don't think that we had a downtick in this stock the entire time you were gone. You come back and now this stock's under a little bit of pressure. But would you say that HSBC's view on this space and AMD is kind of reflective of the street as a whole from those that you've talked to over the last week or so?
Alex, I think that the whole market, I'm questioning if it's me. First quarter was so good, and then I come back and yikes. But in terms of this analyst, the HSBC analyst, in terms of the broader analyst community, definitely joining the majority. If you take a look at the breakdown, there are 49 analysts that cover the stock, according to Refinitiv. 38 of them have buy ratings. There are only 11 holds and no sell ratings. That being said, that $225 price target is quite a bit higher than the median price target for AMD. The median is $195 according to Refinitiv. So that implies only a little bit, like 20% upside from current levels. So this analyst definitely on the bullish side when it comes to the price target and joining the majority with that rating.
While the future is never guaranteed, AMD's business model has some interesting ingredients that could fuel their growth for years to come. This is a story that analysts at Morgan Stanley and the Northland Capital Market will be watching closely. Morgan Stanley analysts have recently stated that compute remains the central area of interest in the new reporting season, with AI exposure increasingly seen as the key driver of alpha generation. Similarly, Northland Capital Markets analyst Kes Richard once estimated that AMD could corner a 13% share of the AI chip market in 2027, generating an estimated $16 billion in revenue. This suggests that AMD's AI revenue is expected to double each year from 2024, based on the company's estimate that it will sell $2 billion worth of AI chips this year. However, this is not the only estimate. Others, like KeyBank, indicate that AMD could reach the $16 billion landmark at a faster pace. Again, this is all attributed to the expected growth in the AI market, which will be followed by growing demand for NVIDIA's AI processors and accelerators. The company's chips, especially the ones specifically designed for AI workloads, are built to handle the massive amount of data and complex calculations, which is why they're perfectly positioned to capitalize on the AI boom. Now, AMD isn't new to this game. It's been developing AI-focused hardware for a while, with products like the EPYC processors and the Instinct accelerators, so it's already established its name as an important player in the AI chip market. But it's not just about selling powerful chips for AMD. In fact, the company is also making a conscious effort to become more developer-friendly, creating software tools and libraries that make it easier for programmers to build and run AI applications on AMD hardware. This open and accessible approach could attract more developers to the AMD ecosystem, further solidifying its position in the AI landscape. It's important to note that this growth that analysts expect for AMD won't happen overnight. Developing and integrating AI into various fields takes time. So, while the future looks bright for AMD in the world of AI, it's likely to be a gradual climb rather than a sudden spike. Overall, the rise of AI presents a significant opportunity for AMD, and if the company continues to offer powerful hardware, developer-friendly tools, and competitive pricing, it could be well-positioned to capitalize on this growing market. And we could see even bigger upgrades in the future. But what are your thoughts on this? Is AMD stock a buy at its current price? Let us know in the comment section. If you would like to know more latest updates about companies like AMD and what they have been up to, then go ahead and click on the next video on your screen. See you there.